I want to understand how you think about the problem more so than the output. I want to think about your process going to this problem. And I don't want to create homework for you, but I want to see how you think about, hey, how does marketing scale? Oh, well, marketing is 20% of, revenue in year one. Like, how is it going to go down to 12% in year two, 7% in year three?
You are listening to the Sure Shot Entrepreneur, a podcast for founders with ambitious ideas. Venture capital investors and other early believers tell you relatable, insightful, and authentic stories to help you realize your vision. Welcome to the Sure Shot Entrepreneur. Today's guest is Andrew Gluck. Andrew is the general partner at Irrvrnt VC. He invests in direct-to-consumer advertisement technology and next-generation startups. He's usually one of the first investors investing $10,000 to $50,000 in startups. He's based in New York. Let's hear from him how he makes investments in startups. Andrew, welcome to the Sure Shot Entrepreneur.
Thank you so much for having me. Excited to connect and chat today.
Tell us about yourself, starting with how did you enter into the investing world?
Yeah, so my background's really heavily focused and still is in the digital marketing world. So I went to Brandeis for undergraduate. I studied economics. I always loved the interplay of marketing and finances and how those kind of connected. As I graduated in 2010, 2011, digital marketing was still very nascent. It was really focused on AdWords and paid search, but started to get into that world. After about 3-4 years in the industry, I went out and co-founded a digital marketing agency called Agency Within. I grew it with a partner to be the largest independent digital marketing agency in the US. There's about 6 holding companies, but outside those big 6 holding companies, which are made up of smaller companies, Agency Within was the largest in terms of spend under management. I worked with a lot of venture capital backed companies, a lot of D2C companies that were early on in the space, companies like Jack Irwin, Trade Coffee, Bandier, Zola, Lola, PetFlow, Helix Sleep, Twillery. Also, we also work with a lot of more enterprise clients like Nike, Intuit, Shake Shack, and Spanx, and ran the agency for almost 4 years. I had a successful exit from the agency in 2018. Took a little bit of time off. As I was thinking about the next thing, I really wanted to bring forward the parts I loved about the agency, which were working with early stage entrepreneurs, working at that kind of 0 to 1, go to market, thinking through unit economics, LTV, CAC, pricing, helping with narrative and storytelling, but really kind of being that early trusted marketing individual. The parts of the agency that I wasn't looking to get into, again, some of the more transactional nature, having employees, growing teams. I really wanted to be nimble and flexible and find the places to fit in where I thought I could add value. So started doing some early stage investing and advising in early 2019 and been doing this for about 2 years now. I've made 20 direct investments, so investing my own capital, check sizes of 10K to 50K, and have done a few, probably a handful, maybe 7 or 8 investments via AngelList through syndicates. Like you mentioned, really focused on 3 core areas: on direct to consumer, on ad tech, and on next gen commerce. So places where I feel I can truly add value based on my experience, based on my network, and based on kind of really getting my hands dirty as well.
Well, this is interesting. You had long history in marketing before you jumped into investing. What kind of startups do you invest in? What stage do you like to meet these entrepreneurs? And what types of investments do you make? Is it pre-seed, seed stage, or much earlier stages?
Yeah, I'd say historically it's been seed or earlier. I've done some later stage stuff through the syndicates, but really core thesis is around being as early as possible. I've invested in companies in their first round multiple times. I've invested before lead investors were identified or really solidified. I've helped make those introductions that have led to seed investments. And I've been the first investor, only investor in rounds multiple times too. And that's where I'm like really passionate, is getting involved early with kind of that founding team where there's that energy and excitement, that ambition, and especially on the financial side, on the valuation side, like valuations are in my mind a lot more attractive. I don't think that much gets changed or de-risked before the next round of capital, whether it's 12 to 18 months later, but the valuations are higher. I feel like I can trust myself between diligencing and also adding value to offset enough of that risk of being that step earlier. Plus, I'm new to the game. I'm not Sequoia and Andreessen and others aren't calling me to fill in the round. I have to find some of those diamonds in the rough before they become the hot company.
You mentioned that you've made 20 plus investments. Where are these companies located? You're based in New York. Do you prefer to invest locally or do you also invest outside New York?
So great question. It's funny because right before COVID upended everything and changed the world, I was really focused on New York City and was leaning heavily towards only doing New York City investments going forward, especially with being early, wanting to meet with these founding teams, wanting to work out of their offices and things like that in terms of, adding value and really being with them. But with post Corona and everyone moving over to Zoom, it's made investing across different regions a lot easier. I still invest exclusively in US, North America. I've invested in a Canadian company, but with kind of US structures in place, focused, really anywhere in the US.
So you're set up to go outside of New York even before the pandemic and COVID related restrictions started. So that's interesting. How has COVID changed the business for you? Has it become easier in some ways or is it more challenging because you're not able to meet people often?
I'll talk about the D2C world as like kind of a microcosm. It's easier
Yes.
than ever to start a company in D2C and harder than ever to scale it. I feel like it's easier than ever to get quote unquote deal flow between inbound, between just people are seeing more decks, sharing more decks. People are, instead of having to do in-person meeting in the city, schedule, arrange it, it's 2 weeks later, you have to go in, you have travel time. Now it's just, you could bang out a bunch of Zoom calls in a day. Here's my Calendly link or shoot me yours and book time. So it's like that top of the funnel has gotten actually broader. It's hard for me also to judge that. I think that's definitely true from what I hear from other people. For me, it's even more so true because as I've progressed from when Corona started, it was 12 months in or 12 months in for my first check, probably 16 months into the business, now almost 2.5 years into the business. So like my deal flow has grown from founders I've met, founders I've invested in, co-investors, building a little bit more of a brand and a name for myself. So the deal flow at the top of the funnel has gotten a lot larger and also stronger because it's easier than ever to start businesses. D2C especially, I think it's true in SaaS. I think it's true in a lot of places. Founders are going and de-risking a lot of the businesses, which is great, and getting that first initial customer, that first pilot, or launching that MVP versus even 2 years ago, which was still late in the game of venture, obviously, you're seeing things that were a little bit more likely to be pre-product, pre-launch, pre-revenue. You still see that. It's just, again, founders are doing more and more, and it's great for them and to move the needle forward. So it's a little bit of a different skill set that's kind of required nowadays.
Why is that happening? Why is it now easier to start a D2C company and why is it harder to grow?
Yeah, I mean, easier than ever between Shopify on the website side and building out an e-commerce brand and all the apps and plugins, whether it's subscription or referrals or whatever else you want to build into the actual platform and product. On the product and manufacturing side, just with more and more of these factories coming online and being able to source from factories. And again, this isn't my area of expertise, but from what I've learned from founders, more and more companies that make it easier to go and create the product too, which is great. Which is great. More opportunity is always a good thing. So I'm excited about that. At the same time, harder than ever to scale. So if you look at a lot of the channels that the first D2C or DNVB brands used originally to scale and get that tremendous growth, obviously Facebook and Instagram were at the forefront of those, especially D2C, especially if you're a product that's a want and not a need. Pet food has search, a lot of search, paid search activity and impressions and searches around it. A t-shirt brand or a clothing brand that's new, it's hard to get people to search for that unless they're searching for your brand. You can build that awareness via Facebook and Instagram. At the same time, the cost of impressions there has gone up tremendously. I think it's like 4, maybe 5x in the past 3 to 5 years. So it's just wild where cost per impression is now versus where it was just a few years ago.
Yeah, a lot of strong trends there. The internet is really evolving. What questions do you ask these startups when you first meet them? What do you want to know?
Yeah, one huge area that I'm really focused on, again, just from being and trying to be really early, is trying to hone in on founder market fit. So, really trying to figure out, is there an earned or learned secret that you have from being in this industry, whether working in the industry at a different startup or at a later stage company? I invested in a founder who covered the industry as an analyst on the PE side, invested in Lunchbox, where the founder was a busboy to CMO at Bear Burger, then created a food technology company. So, what do you know about the industry that no one else knows? And do you have that instinct around the space that other people don't to the same degree?
Can you give an example of a startup? How did you meet the founders? What was the first interaction like? What did you ask them?
Yeah, sure. So I invested in a company called Carraway, and Carraway is a direct consumer kitchenware brand. Founder is Jordan Nathan. One of the companies that I worked with at my agency was a company called Meal Pal. The founder, Mary, got connected to Jordan because they both went to the same university years apart. And I don't even know if she ever even met Jordan really, but she forwarded me the deck. I was interested in meeting Jordan. And honestly, like my first impression when I first heard, okay, direct consumer kitchenware brand, like, aren't these a dime a dozen? Like, again, going back to that founder market fit, like, why is this founding team going to win in this space? And seeing the deck and the information that was presented there without going into anything proprietary, but around different marketing channels and funnels and how they were going to approach it. And again, the level of detail and thought that they had given from Jordan's background. He had worked at Mohawk and other kitchenware brands and basically been GM of business lines and run them really efficiently and effectively. The way that they thought about supplier relationships, the way they thought about all these different things was just wildly incredible. I met with Jordan and really wanted to understand from that background, what are these earned or learned insights? And having been running businesses in the space for multiple years, he knew things that other founders in the space didn't. Not to talk disparagingly about other founders, but when founders come into an industry that they don't know and their background, their niche is, oh, I'm really good at marketing, like mine would be, or I'm really good at design and branding, or I'm really good at finance and operations, sometimes can lack that same understanding that you get from, hey, I was in this industry. I know what can go wrong. I know how to set up things for success from day one. And now I think Carraway's biggest problem today is keeping in stock. They just keep selling out. So that one definitely worked out.
Hey, is there something specific that you can share about this situation? What are some insights that they were able to share that was, wow, okay, that's interesting?
I'll give an example from, I think, the way that most people approach marketing is really, again, it's my background, so I definitely over index on this and drilling into it with people. And I don't expect founders, even founders with experience in the space, to have the same domain expertise as I do. I've spent 10, 12 years in the industry. I've spent $1 billion on Google and Facebook and all the other channels. But the level of detail around keyword research, this is what we're seeing. This is what we think the cost per click is going to be. This is what we think the conversion rates are going to be. This is our contribution margin dollars on these orders. Versus a lot of people will just, this is the monthly impressions. And there's some things I don't want to go into on their end, but just that understanding of, okay, this isn't just, oh, let's go and launch. We'll run some Facebook ads, we'll do some influencer, we'll run some podcast ads, and things will be good. It was just really thoughtful planning. A lot of times people will bash on Twitter or other places, oh, investors that ask for financial plans and projections, like, don't talk to those investors. I don't care so much about the projections and, like, do you think you're going to get to $5 million or $100 million in 3 years or 5 years or whatever it is? I want to understand how you think about the problem more so than the output. I want to think about your process going to this problem. And I don't want to create homework for you, but I want to see how you think about, how does marketing scale? Oh, well, if marketing is, and this isn't necessarily the way I would look at it, but marketing is 20% of revenue in year one, how is it going to go down to 12% in year two, 7% in year three? Oh, we're going to be more efficient. Okay, that's the dream, that's the goal, but how? Have you given any thought beyond being a spreadsheet monkey and just putting in improvements? a lot of the conversation I have around things like that, around things like LTV. Oh, well, we're going to get our customers to come back and buy again. Why? Oh, you're going to release a new product? I'm like, this one I hear all the time, the beauty space is, oh, well, we're going to start with this hero product and then we're going to launch this other product and we're going to have eventually 7 SKUs and people are going to buy, all 7 SKUs from us. Go to your vanity, go to your bathroom, look how many different brands are represented. You have hero products from every different brand. Like, it's not so easy to cross sell. Or brands will talk about their LTV and I'll be like, that's awesome that you're going to keep customers for 2 years. That's your best customers you're going to keep for 2-3 years. What's your weighted average customer lifetime going to be? Is it going to be one and done, one order, and you're going to get 1.3 orders out of customers? Or is it, hey, we'll have a bunch and our drop off will be between order 1 and order 2 will be 30% and another 30%, it flattens out. Those are the conversations I want to have. Have you thought about this? How are you going to think about tracking this when this becomes real? And making sure that the unit economics and scale and work, because you could sell $1 for 99 cents and do a lot of revenue, but eventually you do have to make profit, especially in D2C, especially in some of these industries. Some other industries, SaaS, if you're going and buying customers and increasing recurring revenue, it's a little different. But how do you get from growing and blooming to that actually making money?
Yeah, founders who have that founder market fit usually have thought through the problem. They understand the nuances of the industry. They can go into specific details about CAC and LTV and the trends that are happening and be very comfortable about those discussions. And it's very insightful to talk to them because we all learn a lot from those type of founders. When this whole pandemic started, what I noticed was even some good startups struggle a lot because the personal interaction is not happening. When you're not able to network and meet investors, it becomes a lot harder. Do you feel the same in your areas of focus? Some of the best startups still struggle to fundraise.
One of the challenges is it's never been easier to fundraise and it's never been harder to fundraise. If you're a networked resource founder or a founder with traction and growth, there's tons of capital out there and people fighting over each other to go and get you a term sheet. And if you're not, if you're under networked, under resourced, you don't have that same background and you're raising an early round and maybe you had some friends and family, maybe you had a pre-seed round done, maybe this is your first round of capital, but it's harder than ever because you don't have those serendipitous bump-ins at events and things like that. For my first year in the industry, honestly, even all the way up to Corona, I was making a point of 1 or 2 nights a week trying and going to an event at night, whether it was a happy hour, whether it was going to a startup panel, whether it was judging one of these pitch competitions, something like that. That's how you meet, how you have those conversations and meet other investors. That's how you meet founders. And it's hard. And yes, with digital, it becomes easier than ever to attend an event or to listen to a podcast or to reach out to someone. But it's harder than ever to kind of create that connection that you can in person. So for founders, I think it's to really hone that pitch and figure out, how do we get fundraising? I think there's a few different ways. One is similar to how I think about deal flow is, can I build a personal brand around this problem and spend a few hours a week on Twitter, on LinkedIn, or wherever your constituents really are, and kind of build a brand in the space around that problem. And I've tried to do that. And I think in New York City, in direct consumer, early stage companies, I see a really high percentage of those deals because I've stuck my flag on the ground around that space, trying to produce useful content around that space. So you want to do that, and that can definitely lead to inbound. Another way is batch and blast. Can you reach different people, either finding their email addresses, going to their websites and filling out forms and going in and trying to just get your pitch in front of 1,000 different people? And you should do that. The third way is, can you hone those pitches and go and, if you haven't done this yet, I highly recommend it. Go on Crunchbase and find a list of 100 investors that you want to reach out to that make sense for your stage, make sense for your geo, make sense for your sector, who have shown a willingness to invest, whether it's early, whether it's late, whether it's in this type of round, whether it's in gov tech or legal tech or D2C, whatever it is. But find the investors that are actually a fit for you. And go and try and, if you can, find a warm intro into them. I look at every inbound I'm very open to cold outreach. But a lot of investors, you're more likely to get your deck read if you have a warm intro. But find that list of 100 investors. Maybe it's not 100, maybe it's 50. If you could get 50 people who fit your need and fit your geo and stage and sector to read your deck, you're going to get meetings, you're going to get funded if your product and your team are good. Like, that's what it takes. It's a sales funnel, it's a sales pipeline, just like anything else.
Yeah, most founders don't approach fundraising that way. If they approach the fundraising process just like they approach the customer sales cycle process, managing the funnel, it will be a lot more efficient for them. What are some pet peeves you have?
I think one is a huge underfunding in female founders, black female founders, people of color, immigrants. All those is a huge travesty to just how easy, for lack of a better word, is to get funded if you come from that more network background. You have this idea, even if you're a kind of Me Too product that's been done before, but you have a new spin on it. You have founders with real revenue and real traction that don't get afforded the same opportunities. It sucks. Part of my background and what I've gravitated to, earlier stage over time has been a desire to work in places and be involved in things that are meritocratic, where no one gets to decide who wins. It's not political. It's really just about what can you accomplish? And that's what's exciting about startups, but it's also a challenge and an opportunity as well.
What will convince you to raise your own fund, the next fund?
So I guess that's interesting. So now I invest my own capital. I also occasionally advise companies. And at the same time, I still do some marketing consulting on the side as well. It's like a really nice mix of everything that I like, and I have control over my time and schedule. I haven't yet raised a fund. I don't know if I will. I think it kind of depends on a few different factors. But yeah, I think one thing I'd love to see or change in the industry is probably a little bit more humility, a little bit more transparency. VCs, investors especially, present company included in this, shout from the rooftop when they invest in companies. And they invest when their companies get marked up. Then they invest then they shout and tweet when their companies get to exit. And all those things are great, and it's part of building a brand. But it's really hard. I was having a conversation before this, but it's even hard for me as an early investor who's early in my career in the space, who's trying to remain disciplined in terms of how I invest and my core competencies and valuations and other things. A lot of the kind of wild valuations and things like that going on seem to be a little bit of a distraction sometimes. And I really want to stay in my wheelhouse and disciplined, but it's challenging sometimes.
Yeah, it is challenging indeed. I want to switch to the next segment of our conversation and ask you about community involvement. Is there a nonprofit organization that you are passionate about? Which one?
Yeah, there's a nonprofit organization I was pretty involved in, still involved in, called Tome Shabbos. They deliver, so I'm an observant Orthodox Jew, and I observe Sabbath. And this organization, they deliver food to those in need, Sabbath food, families in need, every Thursday night. I was fortunate to be able to be a support of those financially for quite some time. Over the past few years, I've gotten more involved in terms of actually going and doing deliveries for them and on a regular basis, and being involved not just financially, but have sweat equity in the game and actually spend time in working in the space.
This is very interesting. Thank you so much for spending time with me. You talked about how you started your career in marketing, switched to investing, and now you're contemplating whether to raise a fund next. You shared a lot of insights on specific examples, how you evaluate opportunities, look at entrepreneurs, and what kind of questions you ask. This is very, very insightful to hear real life stories. Thank you so much for sharing your experiences with me.
I appreciate the opportunity.
Thank you for listening to The Sure Shot Entrepreneur. I hope you enjoyed listening to real life stories about early believers supporting ambitious entrepreneurs. Please subscribe to the podcast and post a review. Your comments will help other entrepreneurs find this podcast. I look forward to catching you at the next episode.